Hi everyone. I'm going to take a moment now and walk through the demonstration problem that appears in our text on page 109 at the end of chapter 3, and hopefully this will be of some value to you. In front of you, I've reworded the problem so that you don't need to go back and forth from the textbook if you don't like. Green Thumb Lawn Care starts a business on April 1st. At April 30th, it has the following balances. And then we've listed the following balances, and there are 5 transactions that in this problem that you need to record. Well, first off, it only gives you the balances. It doesn't give them to you in debit or credit response. So you are supposed to assume it is the normal balance for that account, and from your readings so far in class, and from the lectures in our classroom, you should know that assets normally have a debit balance, and prepaid insurance, equipment are both assets. Notes payable normally has a credit balance. Unearned revenue represents a liability for usually cash received in advance of performing services, and since it's a liability, a current liability, it also has a credit balance. And service revenue, a revenue account of $1,800, also has a credit balance. This is simply knowing these balances requires you to know something of the rules of debits and credits that's covered in the text. Okay, so let's cover the first entry. Prepaid insurance is the cost of a 2-year policy effective April 1st. Now, we're at April 30th when we're making these entries to make sure we've stated the financial statements correctly. Okay, well, we know that prepaid insurance is $3,600. We need to record how much of that insurance that has expired. Well, I'm going to write down $3,600. I'm going to write down minus, and I'm going to say for 24 months so that I come up with a monthly amount of insurance expense, and that equals $150. Now I'm going to do it this way. Equals 3,600 divided by 24. So there we see it in front of you. If you're not real familiar with Excel, the formula bar is up here that I'm pointing to so you can see the formula. Equals 3,600 divided by 24. Now we need to record that expense, and the appropriate account would be insurance expense. The amount would be $150. We're only concerned with the month of April. We start the business at April 1st. It's now April 30th. We know that if we debit $150, all the debits and credits have to equal. So what account should we credit to reduce prepaid insurance? And it would be the prepaid insurance account, if I can spell it correctly. And then usually, in proper format, you would state what it was for. And I will say to record insurance expired. And that takes care of entry 1. Now normally you put the date here. I'm simply going to put entry 1 there. Why don't we do entry 2 now? Depreciation on the equipment is $500 per month. Now we know that no depreciation has been recorded and equipment is $28,000. So since they give us the amount here, we're going to debit depreciation expense for that $500, and we are going to credit accumulated depreciation, which is a contra asset account, meaning assets normally have a debit balance. Accumulated depreciation is one that is contra. It appears within that asset account, but it is one that when we take it together with the asset account, it reduces the amount. And here we would say to record monthly depreciation. Okay, we've covered the first 2 transactions. Now let's cover transaction number 3. The note payable is dated April 1st, and it's a 6-month, 12% note. The point that we're getting at here is that we need to reflect the interest expense for the month of April. we need to adjust for that amount. I'm going to slide down the screen a little bit. Let me think of what's a good way to do this where we still will get to see the top. On the third entry, we know we need to debit interest expense. It's a 6-month 12% note, so we will need to credit interest payable, which means we are recognizing the liability that we owe the money, but we do not have to pay it until the end of the 6-month period. And we would label this to record interest expense on the notes payable. On a note payable. Okay, now to come up with that dollar amount, and you can watch this as I type here, we want to take the $20,000 of the note times the 12%, and we want to take just times 1/12. Everyone see that? And we come up with $200. Now that I have that, I'll copy and paste that amount right here. I actually pasted it in that little cell there, but we can't see that. And that would take care of number 3. Now rather than me scrolling and make this difficult, I'm going to slide up and replace number 1 with number 4. And that way you won't have to deal with the scrolling on the screen. Okay, transaction 4. 7 customers prepaid for 6 months of lawn service in April at a cost of $600. Now, the point of this 4th transaction is that we had unearned revenue on the books, $4,200, but 7 of them paid ahead. So we need to record service revenue, and if they paid $600 ahead, then it's essentially $100 a month. We need to debit unearned revenue. This reduces the amount of unearned revenue we had recorded in the account, and we need to record service revenue. Now don't get hung up on the name of the account. You could have called this lawn services revenue, unearned lawn services revenue. You could have even called it unearned revenue and revenue. Different companies use different nomenclature. The dollar amount, again, is going to be, the way I'm going to calculate this will be 600 divided by 6, so 100 times is 100 a month, and we knew that we had 7 customers involved. So we have a debit of 700 and a credit of 700. The important thing to recognize here is that unearned revenue normally has a credit balance. It represents an obligation, something that we owe to somebody since they paid us in advance, and now we need to recognize the revenue that we did perform under that arrangement. And we would label this to record service revenue. And you might say service revenue earned in April. I mean, you don't have to get real fancy here, but it is sort of common to indent another few spaces after your final credit entry and indicate what the entry is for. And we are putting these entries in a general journal. These would be considered general journal entries. Okay, let's do number 5, which is our last example in this demo. Lawn services provided for other customers haven't been recorded yet as of April 30th, but we know we've done $1,500 worth of work. Okay, well, if it's not on the books, we need to put it on the books. We know we're going to have a debit and a credit, $1,500. We know the reason for this would be to record revenue for services provided. Okay, well, if we've provided this information, if we've provided the services and it hasn't been recorded and somebody owes it to us, money that is owed to us would normally sit in an asset account called accounts receivable. That represents the current asset of our normal accounts from our normal operation of our business. And then we're going to recognize service revenue. That takes care of the demonstration problem from Chapter 3.